everyone? Welcome to the Stock Market Morning Prep video for Tuesday, September 23rd. Well, the markets did get some follow-through to the downside. We had Dow Jones down 107, NASDAQ down 52, Russell down 17 and a half points, and then the S&P actually took it on the chin as well, down $16.11. I mean, we did have a little bit of follow-through, and it's difficult for the day traders, and it can be difficult, especially when you're down 9, 10 handles in the pre-market, and then the markets actually just start to roll over for a good hour and 10 minutes, and then pretty much kind of digest the rest of the move for the rest of the day, kind of basin for the bottom. So it's a little difficult if you weren't coming in short. You probably did well today, but if you were day trading, sometimes you have a lost opportunity. And again, it depends on what you're looking at. But so we did get some follow through. Yesterday morning, I mentioned about watch the Russell 2000 for clues on what's the next direction in the markets, and I do believe that still holds true. We have a lot to cover, so let's go over some of the indicators first. And I want to go over some other things too as well, which I haven't showed you in quite some time, which is the EEM, which is the emerging market, and the FXI, which is China. They started rolling over, and if you recall, EEM index, the ETF, actually started selling off here early last year, I believe, and that actually triggered a nice sell-off. And I think we're having the same. But let's move into the first indicator, and we'll move on and we'll cover that EEM. Right now is the bullish percent. And I mentioned yesterday morning that this has been on a sell signal, and we are now actually moving much lower here. Remember, as we went up here back in June, July, we had the bullish percent moving up nicely here. And as you know, this is based on a point figure chart. So this is a very reliable indicator, okay? So just keep that in mind here. When you see especially something like this coming down from the 60 percentile, markets moving along with the markets, that's actually really good. But when you have markets moving higher, right, we had this little sell-off back in August, and we started rallying up, and then all of a sudden we actually plateaued here on that 76%, and we sold off a little bit, but then we pushed to new highs where this did not. That's your cue to say something is wrong. Now, I also showed you the advanced decline with volume, and this is a really bad precursor, if anything, if you will, to come, because when the internals with volume are breaking down and not moving up along with the market like we did here and like we did here, this is something that we're going to need to watch for. Now, in order for us to look for any type of bounce, which I think we would still get, we're not going to move straight down in a line. We need washouts in some of these indicators, such as something like this here. As you can see, when you get down to this 175 negative reading, usually get a little bit of a bounce. So this is basically what I'm looking for. The McClellan oscillator, as you know, very reliable. I'm looking for that washout down here at that 70, 80, 90, even 100 would be even better for the markets to have some sort of a decent bounce. And then when the markets bounce, we're going to see if this bounce is going to be bought into like it has been for the last several years, or if this bounce is going to be short-lived and we're going to start to roll over again. Now, that's going to play an important role for the coming months. Now, remember, we're coming into the fall, and we do have a little seasonal weakness September going into October, but when you have a strong August, it usually doesn't show, and as of right now, it hasn't, right? We're into the 22nd day of September, 23rd day now, actually. So we haven't had any real weakness because we just made new highs just last week. So this could be a precursor. Take a look at the stocks above the 50-day moving average. I showed this to you yesterday as well. Stocks aren't moving. The majority of stocks aren't moving. Selective few are. And when you have the leaders, such as the high beta names like the LinkedIns, the Tesla, Priceline, Chipotle Mexican Grill, you name it, the guys that are moving are not moving anymore to the upside. They have now indeed rolled over. So that's something that we need to keep an eye on as well. So there are a lot of cards that, or I should say a lot of red flags, are really starting to pan out here now. All right, S&P versus the ATR. This is a good gauge of risk. This is actually a good gauge of volatility. And this is something that I like to see versus the VIX. The VIX really hasn't, it does move in these extremes. But if you want to look at volatility, expansion volatility on a regular basis, look at the SPX versus the ATR. Now, this is what we need here. We need these expansions of these indicators, in this case to the upside, anywhere right around here, 17 to 20. would be some sort of a washout, at least a short term. So that's what we're looking for. And as you know, this has a lot of room to run to the downside. So I think we just got started. EEM. Let's take a look at the EEM. We had a beautiful run up from the March and April lows. We had this inverted head and shoulders and really just took off. And now we're starting to roll over again. So we took out this key pivotal low here. Next real area is going to be the 200 test. All right, now this is the emerging markets. And remember, when we had the emerging markets break down here in early 2014, what did the markets do? We sold off miserably. So that's something that we need to really pay attention to now. It's back on the radar. And actually the FXI, same thing. When you have something like this forming, and now we're starting to break down here, this is something that we need to be careful with. So if you long, or you're a long-term investor looking to add, obviously now is not the time to add. I do think there's going to be some further weakness here. No question about it. Now, is the weakness going to be short-lived? That's really what the $1,000 bonus question is going to be. Are they going to buy the dip again? And you know, to be quite honest, it just feels different. And I know feel is not part of trading, but it just feels a little different here at this moment. I've been saying that for the last, I would say maybe 6 to 8 weeks, just not really on the camp that we go extremely that much higher. And, you know, the target was 2006 to 2012 in ES, and that's where we have gone, and we've stalled. And now, want to run into the indexes. Let's cover the dollar first. Now, this is a weekly chart, so it's only one day, and it's right now put in a doji. But, I mean, you have 11 weeks straight up, and currency does do that. They're very true to the trend, the current trend. But if you look at a daily chart, you should see that we really didn't go anywhere. You know, we're just stuck in this range. Now, remember, the volatility is starting to pick up. You see the big expansion of candles. We have low volume, though. So this is something that we could get a correction in the dollar at any given moment. And again, keep an eye on the commodity sector of your choice, whether it be the grains, the metals, or even crude oil. And crude oil is extremely overbought on a daily chart. I don't have it for today because I wanted to show you a lot more indicators. But keep an eye on crude oil for at least a major bounce, retracement rally back, or short cover rally, if you will, to at least 95, 96, and then we would reevaluate it. But here's the ES daily chart, and as you can see here, 10, 12 days straight up, 10, 12 days sideways. We had 1 or 2 days up. But you see the expansion of volatility in these candlesticks starting to come. And we had 2 good days of distribution, as you can see, above average distribution. So to me, I think the indexes are in trouble. Do they bounce? I think so. I do think they bounce. Do they bounce tomorrow? Nobody knows. But I always say the markets are made to fool the masses. No matter what, it's not going to be that easy where you just short the market. And for the longs, it's not going to be that easy just to go buy the dip this time. I do think that and feel that way. Just the way price action is, it just seems a little different. Remember, the smart money are the reason why they're called smart money, because they're selling into rallies. I could see that in many stocks that are trading intraday, that are heavily institutionalized, that are holding a lot of shares, and they're definitely taking profits. So you got 2014 50 at a target high here. Next area will be 2040. Was that possible? Is that still possible? Sure, absolutely. But if we get a bigger pullback to the downside, and we can unwind some of this overbought reading that we've had, and now we're starting to. But if we can get a good washout in some of the indicators that I showed you, then yes, then we can literally still have that Santa Claus rally. Remember, if the washout is deeper than expected, then we could just bounce, and we need to see how the bounce is, then we would really reevaluate the analysis right now, saying that if we get a 4 or 5% correction, more than likely we'd probably bounce as usual, like we've had our 4 or 5% correction for the last couple of years. If it is deeper, and maybe 8 or 9, and we get a couple of small weak bounces to the upside, well, that's your cue that selling continues on every bounce, like it was being bought on every dip. So that's something that we're going to pay extremely close attention to. So let's just keep an eye on that. Here's the hourly ES. As you can see now, we broke down from this channel that we've been in for the last 10 trading days. We did do that once. Your next test, a break below today's low, is going to be the 1968 test. And then again, we would reevaluate it. Here is the IWM, which is the culprit. I mentioned that today. I mentioned it last week. Watch the IWM, guys. If the IWM can't get a good bounce, and we had 3 little days of an uptrend, if you will, or at least a retracement into moving average resistance, outside day reversal was complemented by another big gap down and a big engulfing candle with major volume, which confirms this distribution that's there, major selling going on. And if you recall, the last time the market sold off, back in 2001, 2002, and then 2008, Russell followed suit. So remember that. Can it be different this time? Sure it can. But we just want to be cognizant of our surroundings and what's really happening here, and not just be deer in the headlights in one particular stock or sector that you trade. Transports, again, beautiful follow through to the downside, and now we've hit this middle line here. We've closed below the 20, and we caught this moving average, the center trend line support right to the penny. And this is where, if we start to break down a little bit more and we hit the 34, then the 50, the next area will be this lower trend line support. Then, of course, this key pivotal low, and then lastly is going to be that 200-day. I still think that the transports are going to get hit hard, and I think that's going to be the key, along with the Russell 2000 and every other index, to follow suit to the downside. That's just me. It's what I'm looking at right now. We did get confirmation that we do have a local top in place at the moment. Tomorrow, I want to see some sort of a bounce and fail. If I can get that in the charts, then I'd feel a little bit more comfortable of calling a local top. Right now, I'm just not there yet. Take a look at the Qs. Lastly is the Qs. You can see again the 20. We hit the 34, and of course this trend line area. We closed back above this trend line. This hot pink trend line here. We did tag the 20, but the 34, apologize, and then we caught this upward trend line. Now remember, we closed below the 20 and the 8, so right now we need a couple of closes of further weakness, and then we can pretty much say solidify that at least a short-term top is in place. Obviously, if you're wrong, your stops are going to be up at the highs here. Okay, so manage it accordingly to your risk program. And as you can see, again, 2 big distribution days. So we'll see what tomorrow brings. I wouldn't be surprised if we bounce or we get some follow-through to the downside, mark a low. Okay, remember that. Sometimes we get a little follow-through in the overnight session, we hit a low, and then we rally. And that's what I'm probably looking at for tomorrow's price action.